Hey guys, welcome back to another episode. In this video we will be going through our very simple yet profitable pivot points trading strategy. As usual, we'll have plenty of practical examples. The idea is to fully understand this wonderful trading strategy and to make the most out of it. If you want more videos more often, please smash the like button, subscribe, and turn on the notifications bell, and share this video across your WhatsApp, Facebook accounts, or Twitter to show your support. A very important point before we start. Everything we discuss in this video can be used for currency trading, stock trading, and crypto, because price action stays relatively consistent across different assets, so we're going to go very in-depth in this video. Pivot points trading strategy. Pivot points are one of the few leading indicators and should be the first tool a trader should look at to enter a trade. Today we will dive deep into the significance of pivot points for day trading. When you finished watching this video, you will understand why day traders love using them for entering and exiting positions and how you can employ them as a part of your overall trading plan. So, what are pivot points? First, a pivot point is an intraday technical indicator used to identify trends and reversals mainly in equities, commodities, and forex markets. Second, in financial markets, a pivot point is a price level that is used by traders as a possible indicator of market movement. A pivot point is calculated as an average of significant prices. If the market in the following period trades above the pivot point, it is usually evaluated as a bullish sentiment, whereas trading below the pivot point is seen as bearish. Third, day traders calculate pivot points to determine levels of entry, stops, and profit taking. 5 reasons why day traders love pivot points. First, unique for day trading. The pivot points formula takes data from the previous trading day and applies it to the current trading day. In this manner, the levels you are looking at are applicable only to the current trading day. This makes the pivot points the ultimate unique indicator for day trading. Second, short time frames. Since the pivot points data is from a single trading day, the indicator can only be applied to shorter time frames. The daily and the 4-hour chart will not work because it will show only 1 or 2 candles. The best time frames for the pivot point indicator are 15-minute, 30-minute, and 1 hour. Hence, its use for day traders. Third, high accuracy. The pivot point indicator is one of the most accurate trading tools. The reason for this is that the indicator is used by many day traders, professional and retail alike. This will allow you to trade with confidence. Fourth, rich set of data. Pivot points on charts provide a rich set of data. The indicator gives at least 7 separate trading levels. This is definitely enough to take a day trader through the trading session. Fifth, easy to use. The pivot points indicator is an easy-to-use trading tool. Most of the trading platforms offer this type of indicator. This means that you are not required to calculate the separate levels. In this video, I've included a template with the pivot points system that you can simply upload to your chart. So there's nothing for you to worry about. Get the download link on the description. Floor traders pivot points. Floor traders' pivot points are the most popular pivot points among traders. The central pivot point represents the intraday point of balance between the buyers and sellers and is usually where the largest amount of trading volume takes place. The reason is that the floor traders are using the central pivot point as the main level of the day, and most market orders are usually placed between the pivot point and the first levels of support and resistance. The main reason why the pivot points are working so well on a trading chart is that many traders are tracking the support and resistance levels and are executing their orders when price approaches each specific level. And now, how to read the pivot points. Pivot points are one of the few leading indicators and should be the first tool a trader should look at to enter a trade. Only when prices reach a certain point the trader will be able to determine whether to go long or short and set his profit objectives and stops accordingly. Generally, the pivot points can be interpreted as follows. First, if the price is above the pivot, the outlook is considered bullish. Second, If the price is below the pivot, the outlook is considered bearish. Third, if the price decreases below the pivot, the first target is support 1, or S1. If the price continues to decrease, the next target is support 2, or S2. If the price continues to plunge, the next target is support 3, or S3. Fourth, if the price rises above the pivot, the first target is resistance 1, or R1. If the price continues to increase, the next is resistance 2, or R2. If the price continues to increase, the next target is resistance 3, or R3. How to use pivot points. The very essence of trading with pivot points is based on the idea that the price tends to reach yesterday's close point much more often than to overcome the previous day range. That's why the most popular calculation period for pivot points is daily. In that context, all pivot levels play the role of support and resistance. The central pivot point is the most important part of the whole setup. The location of the main pivot point on the chart represents an important information to be aware because there is a high probability that it will be reached. I prefer to compare the value of the main pivot point with the value of the previous day. First, if the current pivot point is higher than the previous one, I only consider taking long entries. Second, if the current pivot point is lower than the previous one, I consider taking only short entries. I also take into account the distance between the main pivots. First, pivots drawn at a short distance one from another indicate a possible range. I avoid trading on markets where the most recent pivots are close, as it will most likely stay flat and offer low probability entries. Second, pivots drawn with a larger distance between them indicate a trending market. Pivot point trading strategy. This strategy is very simple, but it is one of the most powerful ways that you can take away from trading with pivots. The trading rules are straightforward. First, if we are in an upward trend, you will look to buy at support at either support 1 or the main pivot point, with your target set at either resistance 1 or resistance 2. Second, if we are in a downward trend, you will look to sell at resistance at either resistance 1 or the main pivot point, with your target set at either support 1 or support 2. So, don't focus on support 2 and support 3 level or resistance 2 and resistance 3 level in a strong upward or downward trending market, since these levels are not often tested during a strong bullish or bearish advance. This is a trend following strategy, not a pivot reversal strategy. Rules for buy trade. Step number 1. Open a chart. Open a 1-hour timeframe chart. The 1-hour chart offers flexibility in terms of what you want to do. The market moves slow enough for you to be able to analyze the chart for trading opportunities and also generates enough trades so you have lots of decent chances of making money. Also, the size of the stop loss will be much lower than if you were trading the daily chart. Step number 2. Add the pivot point indicator and 14-period stochastic oscillator. The pivot point trading strategy has a chart configuration with 2 windows. The first window should contain your favorite market combined with pivot points. The second window should contain the 14-period stochastic oscillator attached to it. In this video, I've included a template with the system that you can simply upload to your chart, and it will automatically plot all these indicators perfectly on your charts, so there's nothing for you to worry about. Get the download link on the description. Step number 3. Watch the pivot points. Ensure that the current pivot point is higher than the previous one. If the current pivot point is higher than the previous one, we only consider taking long entries. Step number 4. Enter your trade. Considering price action, pivot points, and stochastic oscillator, all you have to do is to pinpoint your entries around pivot point, support 1, and resistance 1 levels. Enter your long trade when the stochastic oscillator is oversold or below 20 but is starting to reverse upwards. As soon as your entry order has been filled, make sure place your target and stop loss orders. Rules for sell trade. Step number 1. Watch the pivot points. Ensure that the current pivot point is lower than the previous one. If the current pivot point is lower than the previous one, we consider taking only short entries. Step number 2. Enter your trade. Considering price action and stochastic oscillator, all you have to do is to pinpoint your entries around pivot point, support 1, and resistance 1 levels. Enter your short trade when the stochastic indicator is overbought or above 80 level but is starting to reverse downwards. As soon as your entry order has been filled, make sure place your target and stop loss orders. Here are other examples of the pivot points trading to fully understand this wonderful strategy and to make the most out of it. The pivot point indicator is one of the most accurate trading tools. The reason for this is that the indicator is used by many day traders, professional and retail alike. As always, if you learned something new, or if you want more videos more often, make sure you subscribe, click the notification bell, and share this video across your WhatsApp, Facebook accounts, or Twitter to show your support. See you next time.